It's sort of like the Chagall paintings where all these like dervishes are swirling around and all these ghosts. When you drive up there at any time of the day, that's what it feels like. It's all these ghosts flying around, up and down the alphabet streets, up and down Sunset, Marquez, the bluffs. I mean, the most beautiful bluffs we had are all gone. The scope of the disaster is staggering when you really drive around. You know, heartbreaking, soul-torching and heartbreaking. I'm Tamara Rawitt, and I'm a writer-producer. I lived in the Palisades since 1995, first in the bluff areas, and then I was able to buy a house on the alphabet streets, which is a very tightly knit community, and you can walk to everything from there. It kind of simulated the New York I came from, but in a very suburban environment. I love the small town of it. You know, it is a little bit Pleasantville-y, but there were enough fabulous freaks there. Neighbors became friends. Lots of them were in the industry. The agents, writers, casting directors. I mean, we had the full spectrum of show business up there, but we also had lawyers, and we had doctors, and we had researchers and biochemists. And there's really no other area in LA like it. Everyone knows everyone, and you can walk everywhere. And it was great for kids, and it was great for older people. You know, it kind of covered the spectrum. And it's amazing that it's gone. The entire community is gone. Our life as we know it is gone because we don't know what it's going to be. You know, we really don't. I basically had 11 minutes to take out 30 years. I was in Rawitt at the dentist. My friends called me up and said, get up here. It's rolling in. It's really bad. Ran out, got up here to the Palisades, saw what was going on, ran into the house, got the dog, got all the to-go bag, the meds, the computers, everything. Your cortisol is in full throttle, and you're thinking, okay, what do I need? What do I need? What do I need? Oh, am I coming back? We're coming back. We're coming back. This is just an evacuation. And very quickly, we realized this is really bad. So I had to move really quickly, and unfortunately didn't take all the things I would have taken, like family albums and a few heirlooms and a few other things. I woke up to a phone call from the alarm company saying there's a fire in your house. And I looked at my phone and looked at the cameras, and I could see the fireball coming in and hitting my house. So I knew it was over. And then the next morning, I woke up, and my next-door neighbors, and they snuck up to the Palisades. I'll never forget the tone of voice my neighbor Lisa had, which was, it's all gone. Everything is gone. Every house is gone. And she was in such a deep state of trauma, and I never forgot that. It was just chilling. Then there was the, where am I going to land? How quickly can I land? What do I need in this new place? There was 8,000 Amazon trucks running up and down Santa Monica, delivering it all to us fire refugees. And stores were very gracious and kind and gave us a lot of free stuff. But after a month, it was over, like we were old news. So even though the trauma was growing and growing, the support that we were getting subsided because life goes on and people go on. So that was sort of chilling a little bit, It's like, uh-oh, I'm still in this trauma, but you guys are already moving on. To lose all your file papers and your computer and everything, that's a lot. And your medicine and your eyeglasses. That meant you spent the first month chasing all of that to get to a barely functional level of life. I was watching a lot of my older neighbors going through that and, running into everybody at the CVS in Brentwood, and we were all zombies. We had that PTSD zombie look on our face, like we've all been through the war. And we're all here trying to just resume life. And it was bad. It was really bad. I began subsequently feeling this terrible hollowness in the center of me because the center was gone. Everything was gone. had several houses that I was looking at buying, and I chose to buy the one house that was 1 block north of the fire department. And there was no fire trucks. There was no water. There was no saving houses. I heard neighbors got on each other's roofs and tried to save each other. There was nothing. Some of the fire trucks were just sitting around, except in Caruso's village, he had a convoy of fire trucks all ready to save the village. How did they have water? Where did they get water? How were they ready to save that? It's just exasperating and infuriating and heartbreaking. I have joined a lawsuit. There are several lawsuits that are going to come, and we will see. But this was a criminal level of negligence. What is the neighborhood going to be like? What will we be living in? If we move back up there in 12 to 18 months, will there be enough neighbors, right? And will there be an infrastructure? Will there be supermarkets and other needed things that make a town functional? I am deliberating right now. I'm just going back and forth, deciding if there's any other place that I would feel as comfortable in, and if I have the bandwidth to rebuild. That's really the big issue. If I were 50, it would be a much quicker decision, but I'm older than that. It has been really a sobering, taxing journey to deal with the insurance company. It is a constant fight and battle. And here you are, devastated and gutted. And then there they are, continuing to devastate and gut you. And you have to fight for every single thing, and you have to justify every single thing. Some people got off easier. Some people had easier time. But you have to submit a grid of every single thing that was in your house, when you bought it, how much was it. And then you have to go source receipts for many of the things to prove that you own it. And doing the forensic dive on a grid of everything in your house was like doing an autopsy on your house. You had to open up every room and go through everything in your mind and everything that you lost and everything that's irreplaceable. So that's in itself re-traumatizing. I didn't want my third act to be this. We were all kind of arrogantly oblivious. I have yet to really, really cry it out, because I'm just like in a state of function, be functional. I have to look at the positive, and I have to reinforce the positive, and I have to look forward, and I have to be grateful that I landed, and I'm okay, and I'm safe. The most sobering thing is you realize how little you need and when enough is enough. It's a real reckoning for excess. I'm living a kind of lean and mean life, and it's okay. You don't need so much. And what really matters are the relationships you have and the people who mean stuff to you. That's really what matters.
Even before the Eaton and Palisades fires, it was a challenge to get affordable insurance on a home in California. Then there was a 1-2 punch. In January, the fires destroyed thousands of homes. And in February, new maps put 2.3 million acres of state land in high-risk fire zones. It has made a lot of people wonder, how will anyone be able to insure a property? From Los Angeles Times Studios, this is Rebuilding LA. I'm Kate Cagle. After a series of destructive fires in 2017 and 2018, insurance rates skyrocketed. Some companies dropped their customers, and others just pulled out of the state. People living in Northern California, Ventura and Santa Barbara counties, areas of San Diego, Malibu, and yes, the Pacific Palisades lost coverage. Now, the Eaton and Palisades fires could be the costliest in state history, amounting to over $76 billion, according to one analysis from UCLA. And as we learned in last week's episode, even those who were covered have a lot of complaints regarding how their policies are being handled. Many are asking what the future holds. Even if residents can pull together enough money to rebuild, will they be able to get insurance? Judson Boomhower is an associate professor in the economics department at UC San Diego. He specializes in climate risk and adaptation, specifically wildfires. Professor Boomhower, thank you so much for joining us today.
Thanks for having me.
So let's just start with the fundamentals before we get too much into the weeds here. How are these companies assessing risk, specifically in California?
There's a lot that's changed, in how we do this, even in the last 10 years. It feels like, as you said in the opening, this is a category of losses that has just skyrocketed in the last decade. And so we've been seeing a lot of changes in how this risk is measured and priced. But at a very high level, what you should think about your insurance company doing is using some sort of model that is looking at things like the vegetation around your house, the topography around your house, so how steep the ground is, for example, how far your house is from areas that have lots of really dangerous vegetation from a fire perspective, and how good the quality of your local fire department is, how far away that nearest fire station is from your house. There are various models that are putting that information together in different ways and trying to make some prediction about how likely it is that you're going to lose your house in a wildfire. So at the core of it, everyone's trying to use those same pieces of information along with, sometimes other information about the characteristics of the house. At the end of the day, we're all trying to do a little bit of a crystal ball exercise to make a granular prediction about one house's risk of loss in a setting where we just don't have a lot of historical data to do that in the same kind of way that we can for car accidents and heart attacks and other things.
Well, and I think what's frustrating to some homeowners is how we've gotten to the point where some folks who maybe had insurance for even decades, they've lived in this home, and now all of a sudden they're being told that they are too risky to insure. Is that because of climate change? I mean, how is the market changing so much?
Absolutely. Climate change is increasing the risk of these. I say absolutely, but, I'm a scientist, I should say. All of the scientific evidence points to a really important role for climate change in more frequent and more intense fires. We've also continued to build more and more homes in harm's way. So we've been concentrating our base of assets in places that are more and more threatened. And so what that gives you is this increasing risk overall for homes in California. The other thing that's going on, I think, is there's been some recognition that perhaps we weren't taking this risk seriously enough in the past. And so, as you said, the 2017, 2018 fire seasons were just terrible. And in some ways, I think we might think of those as sort of a wake-up call to insurers that perhaps the way they were pricing this risk historically wasn't really capturing the risks that they were facing.
Well, we've talked on this podcast in the past about how many neighborhoods in California were essentially built to burn. Fire is a part of this landscape. We're also prone to earthquakes and landslides, all these potential disasters. But it does feel like a recent phenomenon, like the last 5-6 years, that people are just outright getting dropped from their policies. Is that, like you said, the companies are just grappling more with the risk?
And that's there in the data. You say it feels like that, and I hear that talking to folks in my community too. But that's also, you can see it in the data. So if you look at California Department of Insurance data on the number of homes that have coverage through what's called an admitted market insurer, which is just your basic private market insurance policy. That's gone down like 20% since 2010 in particularly the zip codes that have very high wildfire risk. So in the parts of the state where wildfire is a really big problem, like we can absolutely see this pullback in the data. And I think, why have we seen that so suddenly? I do think that this risk has always been there, but 17, 18 were just off the charts in terms of losses. And 2020 was bad. And of course, 25 is bad. And, 23 was bad in Lahaina. And so for whatever the process is that's pushing this, it's just like there in the loss record that over the last decade, wildfire losses have really taken off. Some of my favorite, we promise not to get too nerdy, but some of my favorite data on this come from Swiss Re. So Swiss Re is a big financial firm that, among other things, sells something called reinsurance. And they put together a lot of nice data on natural catastrophe losses. And they have a nice report that shows that the share of global natural disaster losses coming from wildfire, as opposed to hurricane and flood and other things, has like doubled in the past, 10, 15 years. So the losses due to wildfire are just taking off at a really scary rate.
Well, thanks to LA Times reporter Lawrence Darmiento. In our previous episode, we know all about reinsurance in the California market. How does climate modeling fit into all of this and what homeowners are going to be looking at in the next 5, 10, 15 years?
Yeah, so modeling more broadly is really essential for understanding how to price this risk. So I know you talked about CAT models, wildfire catastrophe models. Those are tools that are used to try and model the likelihood that a house is going to burn down and how much it's going to cost to rebuild it if it does burn down. And the reason we need those models in the first place is because these natural disaster risks are fundamentally different from most of the stuff that insurance companies cover. So if you think about your collision coverage on your car, for example, it's not that hard to understand how much I should charge you for collision because there's like decades of super good data on car crashes. And unfortunately, car crashes happen all the time, all over the place to all kinds of people. And so it's really easy to just look in historical data and understand, a 1998 Hyundai is likely to have crashes at a certain rate, especially if it's driven by a 19-year-old man and you crank out a premium based on historical data. Wildfires and hurricanes and floods, they just, thankfully haven't happened at the same rate historically. And so this normal actuarial approach of looking at historical losses in a given place for a given type of policyholder and calculating the average rate of loss, it just doesn't work because there's just not enough data. In addition to the problem that climate change is changing the situation and making that small amount of historical data less relevant. And so we need a different way of trying to understand how risky a given property is. And that's where these models come in, these catastrophe models that are like the state of the art in terms of insurance pricing. And they are not perfect. It's really important to say that they are very much not perfect and they are very much educated guesses. And one of the uncomfortable things about them is we kind of have no way of really understanding exactly how far they are from the truth, but they give us some sense of how likely it is that a house made of a certain kind of material is going to burn down and, if it's surrounded by a certain amount of vegetation. And then when you layer climate change on top of that, you basically want to think about in that model changing the weather conditions, the precipitation patterns, the wind that a given house in a given place is experiencing. And so take that same, 2,000 square foot house with a tile roof surrounded by well-maintained vegetation and confront it not with 2025 fire weather, but 2050 fire weather. And that's the best we can do to give ourselves sort of a forward-looking picture of how much these losses are going to go up. And that's what tells us how high we think the insurance prices need to be to cover that risk.
I can't imagine any of that is good news for LA County specifically.
Well said. Way to make this personal. I think that's right. It's particularly not good news for places that are more dangerous than average. One of the big changes we're seeing in the way insurance is priced especially for wildfire, is in the old days, we used to just kind of pool everybody together and charge an average price that reflected everybody's risk on average. And so if you lived in the Palisades, or if you lived in eastern San Diego counties and some areas down where I live that have very high wildfire risk, you got pooled in with a bunch of people that lived in very low risk areas, and you all kind of cross subsidized each other. These days, because insurers are understanding how important the wildfire peril is, they're really investing more in developing these tools that are designed to let them segment the market more granularly, right? So they can find the places that the model says are really high risk, charge high prices in those places, not in a way that's designed to exploit people, but that's designed to cover the higher cost in those places, and then charge lower places in the what appear to be the truly low risk places. And so as we move towards this world of like finer slicing of the market, that's not good news for you if you have always been living in a high fire risk place. We're seeing a ton of changes, and it's really hard to say in real time what's going to happen, because on the one hand, we have all these scary changes in terms of increasing losses that are really stressing the market. And on the other hand, we're seeing a lot of response by the state of California through regulation, and by individual insurers through innovation and changes in the way they do business that hopefully may help to make things a little bit better. And I would be foolish to try and make an exact prediction about where things are going to come out. It seems clear that one thing that we're stuck with, or I don't know how we solve this problem without higher insurance prices. It just seems like, given that the risk is going up, insurance prices have to go up to reflect that risk, or else insurers aren't going to be able to make enough money to, cover the policies that they're writing. And so I think when we look forward, I do think that, we need to understand that insurance prices are going to need to be somewhat higher. And then the thing that's going to a really important thing that will determine how much higher they need to be is how good of a job we can do on the mitigation front. So how much can we reduce risk to lower the costs of insuring these houses that are going to be facing higher and higher probabilities of wildfire due to climate change.
All right, so we're going to get into how we can mitigate the risk in just a bit, but let's take a quick break.
During one of the most severe windstorms Southern California experienced in more than a decade, the Palisades and Eaton fires ignited, leaving heartbreaking losses in our communities. Now, as we build back, we're building stronger, cleaner, and more resilient. In communities most vulnerable to dangerous weather conditions and wildfires, Southern California Edison is placing power lines underground, hardening the electric system by installing wires with protective coating, and adding advanced technology to help keep communities safe. So when Southern California faces the next storm, the next most severe event,
Copy helicopters, structures adjacent to the Pipe Road.
we'll be ready. Learn more at sce.com/disaster recovery.
All right, we are back with Rebuilding LA and climate analyst Judd Boomhower. As we enter the rebuilding phase in the Eaton and Palisades fire zones, there's been a lot of debate about whether communities in these high-risk areas should be rebuilt at all. What are your thoughts about that, and why?
Yeah, I hear that discussion too. And, I didn't come with spreadsheets worked out to tell you where exactly we should rebuild and where we shouldn't rebuild. But I have kind of a high level take on that, which is I think a lot of this debate comes from a concept that in the climate world we call managed retreat. And that mostly has been something that we've talked about in the context of sea level rise and flooding. And so there are places where the flood risk is so high that you just know that over a 10-year period, a house is going to flood over and over again. Or there are homes that are, really close to the coast in places where we know the sea level is likely to inundate that home in a couple decades. And so those communities are places that we talk about strategically abandoning through this process of called managed retreat. And the idea is the natural hazard risk is just so high that it doesn't make sense for anyone to live there anymore. That idea kind of casually gets ported over to the wildfire space sometimes. So I've heard folks talking about this idea of abandoning or retreating from high wildfire zones, which sometimes gets presented as, immediately abandoning places and sometimes gets presented as not rebuilding them after they burnt down. It's not obvious to me that that makes sense, right? That pencils out. And it's because the wildfire peril is so much more diffuse than the flood peril. Let me explain what I mean by diffuse. In the flood and the sea level rise context, you can essentially point to the homes that are going to flood. And they're going to flood over and over again. In wildfire, there are a lot of homes throughout California and the rest of the Western United States, each of which face a small to moderate risk of being totally destroyed in a wildfire in any given year. And if you think about a place with a high wildfire risk, the annual probability of that house burning down might be 2%. That would be a really, really dangerous place in terms of the wildfire statistics. So what does that mean? It means sometime in the next 50 years, if statistics play out according to the math, that house is going to burn down in a wildfire. Or if we rebuild in this place, it's going to burn down again sometime in the next 50 years. To bring all this together, I would say the likelihood of a given house burning is just small enough that it's not clear to me we need to back away from these places, especially when you're talking about communities that we've already built. We already have infrastructure. We already have social networks established and all kinds of stuff. It seems unlikely to me that those are the places we want to back off of.
So let's get into this mitigation, because what you're describing is clearly happening. People are rebuilding in these high fire risk areas. How should they build back differently?
We know a lot more than we did 20 or 30 years ago about how to make homes wildfire safe. And so there are a ton of things we can do when we build a house that are going to make that house less likely to burn down in a wildfire. The roof is one of the most important determinants of how a home performs in a wildfire. We want to make sure we have a Class A fire-resistant roof on that house. The siding, the deck, the vegetation around the house, all of these things are super important. And some of the best numbers that I've seen from a group called Headwaters Economics suggest that the good news is the cost of building a new house or rebuilding a fully destroyed house in a very fire-resistant way is not that much higher. So the delta here is relatively small compared to the cost of sort of more traditional construction approaches. And so there's a lot of low-hanging fruit, especially when we're rebuilding homes.
Well, let's talk about defensible space. Let's talk about Zone 0, which we hear a lot about in the rebuild for the Palisades in Altadena. This idea that you're going to keep defensible space between your house and any kind of vegetation that might be flammable, but then that means people are worried that they're not going to be able to have rose bushes and pretty trees in their yard. So how is this really going to be applied as we move forward?
Yeah, a couple things on that. One, I just gave you this really optimistic take on how much cost-effective mitigation there is to do. The bummer, the downside is that is for new homes or for homes that we're rebuilding from scratch. If you're thinking about retrofitting a structure that, is already standing, the cost picture is really different. So a lot of those home hardening things that we were talking about are just like, they don't pencil out for most homes if they're already built. The exception in a lot of cases is the kind of defensible space vegetation stuff, right? So if you were lucky enough to survive one of these fires and your house is mostly okay, apart from smoke damage and other things, then if you're thinking about cost-effective retrofits, you might be looking at these defensible space upgrades that we're talking about. And exactly like you said, these are controversial, right? Because one of the recommendations here that's going to lower your fire risk is to take all the wood mulch and all the vegetation within 5 feet around your structure and rip it out, and put in rock, basically like gravel, and that all the science suggests that's going to make your house less likely to burn down. At the same time, there are people that don't want to do that. And when I put on my economist hat, my cold-hearted economist hat, there is an argument to be made that if you're willing to accept the higher risk, and if you're willing to pay the higher risk through appropriately higher insurance premiums, that's a trade-off that we want to let you make in the most narrow kind of Econ 101 sense. But there's a couple problems with that because Econ 101 always has a couple problems with it. One of them is you might be really happy to keep your mulch and your bushes under your single pane windows, but your neighbor located, 10 feet away from your house is also going to be at a higher risk of having their house burn down, because if your house ignites, it's likely that their house is going to ignite. So there's some really important neighbor community effects here that we need to think about.
I have this image seared in my mind from January of watching a fire move down a street in Altadena and watching the fire catch leaves that were on the ground below a house, and eventually it spreads up, it gets in under the roof, and then watching, before you know it, the house is fully engulfed in flames. So what is the role of local government in all of this? Do you feel like California should be doing more to proactively force homeowners to make some of these changes?
Yeah, so those structure-to-structure spillovers are absolutely important. I've done research with my co-author, Patrick Bayless, that can measure those in historical data on fires. Lots of other people have studied that. And like you said, we all saw it on the news in January. It's just like this neighbor and community dimension of risk is super important. And so, it's not my place as an academic to say exactly what policy should be in California and shouldn't be, but that's like a classic economic rationale for some kind of government regulation, right? When you have the decisions of one person in terms of how they're going to manage their house affecting the safety of people around them, that's a classic place for government intervention, either through just direct regulation, just saying what you have to do, or through some kind of gentler nudge instrument, like trying to offer subsidies or information campaigns that try to move people in a safe direction.
Well, we also heard homeowners, specifically in the Palisades. We heard billionaire Rick Caruso point his finger at the management of county and state lands, these overgrown trails that were close to communities. There's been a lot of criticism that either the local government or the state government wasn't doing enough to clean up the brush in those communities.
There is a lot of work right now that is going into trying to understand exactly why communities burn down in wildfires. And that sounds like such a simple question, it's because a fire came through and burned the houses down, but it's complicated. We think that there is a role for this broader landscape scale threat that, that brush far away from a house can ignite and blow embers into the community. That absolutely happens. And, that suggests that there is a really important role for this broader kind of landscape style management, but the evidence there in terms of understanding exactly how much that improves things if we change the way we manage land far away. It's just not there yet. It's a really, really important place for us to try and get more precise understanding of exactly how these fires start and spread in communities.
Well, and you spoke about the fact that the mitigation costs can be actually really high for existing homeowners making some of these changes. So what role could insurance companies play in incentivizing people to do something big, like redo their roof?
Yeah, well, so in your economist's dream, insurance would be a really important tool for achieving this kind of mitigation, because a cartoon model of an insurance market is going to incentivize every cost-effective risk reduction investment that's out there. And the reason is, in your simple cartoon insurance market, your insurer is setting a price that prices in how likely it is that you're going to make a claim on the policy. And if there's something you can do that lowers the likelihood you're going to make a claim on the policy, and the cost of doing that thing that makes you safer is low, you're going to want to do that thing, because you're going to make you're going to make money when you turn around and pay lower insurance premiums. And that's how we would like insurance markets to work. And I think we are trying to move in that idealized direction. The real world is a little harder for a few reasons. One of them is that we are still trying to understand exactly how much each of these things that you can do to your house lowers the cost of it burning down. We know they matter. We know if you do them as a package, the outcomes are a lot better. But if you replace your vents and you don't clear vegetation in zone 0 around your house, how much of a discount should I give you? I don't know. That's harder for me to calculate. So there's some uncertainty. And the other thing is that it's expensive for companies to do things that are more complicated. That's, you bring the PhDs in to say they're really deep and sophisticated things. It's expensive to do things that are more complicated. And as soon as you start trying to rate insurance in a really super granular way, at some point, the benefit to the insurance company of doing that more granular writing is going to get swamped by all the costs on the back end of having a more sophisticated system. But hopefully, we are moving in a direction where technology is going to make those costs smaller. Innovation is going to make it hopefully easier for insurers to do this more granular measurement and policy rating. And I'm somewhat optimistic that we're going to move in a direction where we actually do start to see insurance prices encouraging a little more of this innovation.
This all seems like California should be on this. How is that actually playing out in the real world, this incentive idea?
We have had an interesting experiment in California where the Department of Insurance has actually moved to require insurers to start offering more discounts. So now there's a list of things. For example, I think a Class A roof is on the list, and I think vents are on the list. There's a list of things that insurers are required to price in the wildfire component of the premium for a home in California. So what the new rule says is that they have to give you some amount of a discount if you've done these various things. And I haven't, exhaustively reviewed the rate filings from all the companies, but the ones that I have looked at, it seems like the discounts that have been offered are not as big as, maybe we hoped they would be going into this. I think there's something to learn from that as we try and figure out what is it that's going to shake this market up and move us in a direction where we get more granular pricing, or should we be humble and accept that there's actually some limit there in terms of how sophisticated this market can be? And then are there other instruments that we should be looking at instead of just expecting insurance pricing to make it all happen?
Well, I want to circle back and get back into what all this means in Altadena and the Palisades as we move forward. But first, let's take a quick break.
Hi, my name's Jordan and I'm a producer at LA Times Studios. I'm here to talk to you a little bit about our new sponsor, Ollie. Like many dog owners, my dog Zooms has become like a child to me. And with that type of responsibility comes the constant need to keep them happy and healthy. One way I make her mealtime a little bit better is through Ollie. Ollie delivers clean, fresh nutrition in 5 drool-worthy flavors, even for the pickiest eaters. Made in U.S. kitchens with the highest quality, human-grade ingredients, Ollie's food contains no fillers, no preservatives, just real food. And here's the thing. Healthier food means a happier pup. More energy, shinier coats, better poops, and more excitement at mealtime. Fill out Ollie's 30-second quiz and they'll create a customized meal plan based on your pup's weight, activity level, and other health info. For any first-timers, Ollie will send out your pup's first box with 2 weeks worth of meals, a free storage container for mess-free serving, and a guide of how to gradually switch them over to their new diet. Dogs deserve the best, and that means fresh, healthy food. Head to ollie.com/rebuildingla, tell them all about your dog, and use code RebuildingLA to get 60% off your welcome kit. Plus, they offer a happiness guarantee on the first box, so if you're not completely satisfied, you'll get your money back. That's OLLIE.com/rebuildingLA and enter code RebuildingLA to get 60% off your first box.
We were very enclosed in this space. We felt very safe in this space. I think we both felt that we could survive anything here, oddly enough.
Michael Riley, a union operating engineer, and sculptor Colleen Starrett lost their home and her art collection in the Altadena fire. Michael's union immediately stepped in to help.
I looked to the east, and there was this very ominous glow in the sky right over there. And I knew instinctively, based on the fact that the wind was blowing at 80, 90 miles an hour at that point, that it wasn't good.
Well, when the fires were still raging, we created a Local 12 Emergency Disaster Relief Fund, and almost immediately locals from throughout the United States and Canada reached out to help.
I've been a construction worker most of my life, and we tend to be pretty tough.
To hear Michael and Colleen's story, stay tuned for the end of the episode.
All right, we are back with Rebuilding LA. Judd, we've heard from a lot of people that this insurance factor is key in whether or not they can rebuild in Altadena or the Pacific Palisades. What is at stake at this moment?
I think what we're seeing is that homeowners insurance is really starting to be the place where the rubber hits the road in terms of adapting to climate change. And so we have just been through this absolutely terrible experience in LA, and there's a bunch of people that are relying on their insurance to make them whole as much as possible to the extent that it can. There are sad stories about lack of insurance and underinsurance, and that's a whole separate discussion that we should have about how do we make sure people have enough insurance coverage. Going forward, there's every reason to expect that there are going to be more really bad wildfires in California and throughout the West. And we really, really need to figure out how to protect people financially through insurance. And we also need to figure out how to protect people in a physical sense through investments in mitigation that are going to keep those disasters from happening as much as possible. And insurance is absolutely right at the heart of all of that. It's really important that we make these markets work as well as we can. I've started saying in my research talks that I think one of the most important things we can do to adapt to climate change in North America is make property insurance work better. And that's because it both protects people when they suffer terrible events, and if designed well, it also creates incentives for people to do things before the fire comes that are going to make their home more likely to survive.
So what more can be done to keep insurance companies in California, to keep people insured? Is the only solution to allow them to charge higher rates?
This is the core challenge that the Department of Insurance and insurance regulators everywhere face. They have to thread a very tough needle. They need to make sure that insurance prices are high enough that companies can make money from selling insurance. And at the same time, they're tasked with somehow finding a way to make sure that insurance is affordable. And at the same time, by the way, make sure that every insurance company is adequately capitalized to pay their risks. And so that you don't have insurers that are charging so little money that they actually don't have enough money on hand to pay their claims when a disaster happens. So that's the classic challenge of affordability, availability, and solvency. I think we are seeing a lot of action in terms of rate regulation and accompanying regulation in California. As we said at the top, unfortunately, I do think higher premiums are part of the package. When you live in a world where wildfires are becoming more common because of climate change and other factors, it's hard for me to see how you don't have to accept some amount of increase in insurance prices in order to keep companies willing to offer coverage. There have been other things that historically insurers have pointed to as like real problems in California that I think they would say we're moving on now. One of the things that insurers have historically pointed to is that they have not been allowed to use the most sophisticated tools for pricing wildfire risk. Harkening back to our conversation at the top about CAT models and, various ways of pricing the wildfire risk to a home and why that's complicated. There's been some movement in Sacramento to open up the set of tools that insurers are allowed to use to price risk. And I'm interested to see the extent to which that changes the situation in California. There's also been some movement to allow them to make it easier for them to pass through their costs of purchasing reinsurance, which is the product that they buy to protect themselves against really bad bankrupting outcomes for the insurer. I think, that's all starting to play out, and we got to see the extent to which that changes things in the market.
Does anything make you...
I'm sorry to talk over you, Kate. This is the only time I'll do it, I promise. I really don't want us to lose track of mitigation too, right? Like there's a limited set of things that are cost effective, but we got to do those things because if we do them, they should make insurance cheaper.
Is there anything that makes you optimistic?
I think climate change is baked in at this point. No matter what we decide to do about reducing our greenhouse gas emissions at this point, we're sort of already in for a lot of warming, which means we're in for more fire weather. But it does seem like we're responding, right? We're changing the way we regulate the insurance market in California. In terms of innovation, I'm seeing lots of cool ideas from startups and insurance companies for how to use sophisticated aerial imagery and drones and apps and cell phone cameras and all kinds of stuff to lower the costs of measuring, defensible space and taking pictures of your vents and sending them to your insurance company. There's a ton of enthusiasm and innovation around how to solve this problem. It doesn't take away from the fact that we fundamentally have a really difficult challenge here and there are no easy answers, but there is a ton of enthusiasm and attention to this risk in a way that there just wasn't 10 years ago.
Judd, thank you so much for your time and breaking this down for us.
Thank you.
Thank you so much for joining us. That's Judson Boomhower, a climate and risk analyst at UC San Diego. That's it for Rebuilding LA today. We'll be back with a new episode next week. You can find us anywhere you get your podcasts and watch us on YouTube. Please subscribe and leave us a review. We would love to hear what you think. Now, a word from our sponsor.
When you think of construction workers, the term art does not immediately come to mind. But if you talk to workers who build things, they often mention their creativity. Michael Riley and Colleen Sterrett lost their home and her art studio in the Altadena fire. The art that was lost and the challenges of reconstruction are on their minds. Rebuild-SoCal Partnership visited Michael, a union operating engineer, and Colleen, a well-known sculptor, on a Sunday afternoon as they planned for the future.
Yeah, look at the pine, Michael.
Yeah, I know, it's coming back.
We were very enclosed in this space. We felt very safe in this space. I think we both felt that we could survive anything here, oddly enough. Yeah, I had a studio full of work, a 50-year archive of my works on paper, so it's pretty overwhelming. But having been here a number of times over the last 3 months, I really feel it's time to let go and
Move on.
yeah.
This kind of hardscape is not done anymore. There aren't too many people around who know how to do this. One of the things that is really important to us is the fact that when the Corps of Engineers come to remove the foundation of the old house, is that this does not get damaged. It's very important to us that we preserve this as part of what we inevitably will rebuild here. I looked to the east, and there was this very ominous glow in the sky right over there. And I knew instinctively, based on the fact that the wind was blowing at 80, 90 miles an hour at that point, that it wasn't good.
The main thing, because I do such large sculptural work, we weren't going to bring the sculpture, but I brought my computer, all my hard drives with all of my documents of my work. Dogs packed up, and we headed out about 9:45. Our neighborhood didn't get an evacuation warning until 3:30 in the morning.
I was very fortunate to get into the Operating Engineers Apprenticeship Program because it gave me a very great understanding of what an operating engineer does in building and creating. Well, when I drive around Los Angeles and I look at the buildings and the bridges and all of the things that have been built, I see beauty.
Union Local 12 and locals from around the country provided us with financial assistance when we needed it, and we are forever grateful.
And it proves the strength of unity and being part of an organization that cares about people.
David Sikorsky, leader of Operating Engineers Local 12, could see the fires from his office window in Pasadena. He knew that many of his members would be impacted.
Well, when the fires were still raging, we created a Local 12 Emergency Disaster Relief Fund, and almost immediately locals from throughout the United States and Canada reached out to help.
Operator John Renner worked the excavator on the site.
They requested us to come help do their house because they saw us on a previous house, so I felt lucky enough to help out a fellow member.
We want to try and maintain what we have here, but we have to be more resilient for how we build in the future. I'm Irish, and we tend to be pretty resilient given our history. I've been a construction worker most of my life, and we tend to be pretty tough.
I'm a sculptor, and we tend to be pretty resilient too.
It will be a great relief for us once this thing is cleaned off, and it gives us then an opportunity to look at what the potential is for the future here.
My sculpture comes out of a combination of my lived experience, my love of nature, and how I move throughout the day. I am very excited to get back to work as soon as I can and get back to our life.
The Operating Engineers Local 12 has made a commitment to the community here and the members that lost their home, and we're going to be here for the long haul.
Rebuilding LA is hosted by and reported on by me, Kate Cagle. Our senior producer and showrunner is Megan Larson. Our associate producers are Jordan Patterson and Megan Botel. Our video director is Julia McCabe, our director of post-production is Patrick Stewart, and our senior sound recording engineer is Nick Norton, with audio engineering help from David Iskandarian and motion graphics by Dougal Henkin. Our video editors are Peter Grayson and Daniel Flesher. Ben Church is our senior coordinating producer, and Anne-Marie Hauser is our production manager. Our podcast marketing manager is Bryn Jura, and our product marketing director is Becca Dorman. Our general counsel at the LA Times is Jeff Glasser. Special thanks to President and Chief Operating Officer of the Los Angeles Times, Chris Argenteri, and the executive editor of the Los Angeles Times, Terry Tang. Rebuilding LA is co-created by LA Times Studios president Anna Migzanian and executive produced and co-created by Darius Derrickson. And one final thank you to all the residents of Altadena and the Pacific Palisades for sharing your stories with us.